how does a forex exchange trading work? So first of all, if you're a beginner, we need to understand we are in a forex trading. So we are in a foreign exchanging trading. So let's get a little bit of terminology and understanding in terms of how the forex trading itself, forex exchanging itself work. So as the name explains itself, right? The forex market is a global market for the trading of currencies, for example. So one of the instruments that is being traded in the markets, the first one it's currencies, right? The fall of the gold standard happened in the 1970s. So before people they start trading currencies, because they're trading the foreign exchange only based on the currencies, based on a rand and a dollar, a euro and a pound, for example. That's a foreign exchange. That's exchanging of money to a different currencies. But before these currencies, people start exchanging things. They were exchanging gold. Gold was the one that they were using to exchange or to buy things, right? Until it's being simplified and a dollar, a United States dollar being introduced, and then now have what you call a currency like a United States dollars and start trading. I don't know. There's a lady talking. I don't know. Are you asking? Oh, okay. All right. No problem. So this leads to the world currencies trading against each other on the global forex markets, right? So if you feel the euro is going to rise against the British pound, you can make a trade reflecting the belief that you are believing. So if you feel like the European currencies is gonna raise against the Great British Pound, then you can say, I'm gonna make a bet against the Great British Pound. It's a very easy strategy. You only buy and sell. So as a beginner, this is what we should understand at the moment, that the only thing that we can do in a market, we can buy or we can sell. Simple and easy, analogy about the forex. We're gonna get to the way you get the, price action, where you get analysis and so on and so forth. But now let's understand that when it comes to a forex, when you see a one currency is dropping, you can buy a different currency that works with the same currency. Therefore, the traders widely use economic calendars. Yes, is there a question? Is there a question? All right, no question. Please remember to mute the mic so that when you're talking, you shouldn't interrupt anything. As I was saying, that therefore, the traders widely use economic calendars to stay on the track of a valuable financial report from their belief. So if you do believe that the euro is gonna rise up, how are you gonna know that the euro is gonna rise up? You need to check the financial calendar. So it's easy. When you are in a forex trading, you are in the biggest industry in the world, the biggest industry where the banks, they're putting their money there. The investors, they are putting their money there. That funeral cover that you pay, the Sanlam, whatever, they are putting the money right there, right? They are putting the money right there. So it's the biggest industry in the world that we actually need us to pay attention and to research. So the mostly is to actually, go on a economic calendars, understand the economic calendar, and then from the understanding the economic calendar, we can now be able, to continue and understand that, okay, this is the instrument that actually we need to trade, we need to buy, or we need to sell. All right. In stocks and commodities market, it can be a frustrating when there is no upwards price movement. So not only in forex you trade currencies, as the first statement says. So there's other product called the stocks, right? There's other product called the commodities. So we're gonna go on by time goes and explain, how exactly it's going. Okay, just a minute. There's a gentleman I think who want to join, but he can't get the link. So let me just quickly. Let me see. Okay. All right. All right. Okay. Sorry about that. Someone wanted to, be part of us as well. So another term, another good thing about the forex market is that it actually, it is that much easier to sell or to shorten the product. So it's not something that is difficult to do it. It's very easy with your phone, with your computer. You click a sell as long as you understand the knowledge that, okay, this instrument is going up. Let me click a buy. So everything that goes up, it's a buy. It's called bearish. Everything that goes down, it's a sell. You are selling it. It's called you're bearishing. So you are bullish, you are bearishing. And I'm sure you've been seeing the pictures with Incomo that does like this. So it means it's a bullish, it's a bulling the market. The market is going up. Then you have seen the signs of Incomo again that goes all the way down. It's bearing, the price is losing the momentum, the price is going all the way down. So yeah, basically in terms of the introduction, forex exchange, it's all about trading the currencies between one country to another, and then it started all the way from the gold and simplified to a dollar, and the dollar put it in a stock market and then be able to start to trade. So these are one of the type of the currencies that you can see. There's a Euro USD, GBP USD, USD CHF, USD JPY. Now, they only put as a symbol when you're seeing it in a market. So in a market, you're not going to see European currency versus United States dollar. So it will be just a symbol. You're not going to see the Great British Pounds versus United States dollar. It will be just the GBP versus USD. So simple like this. These are called currencies. These are called currencies. Each currency is called instrument. So when you are trading, whatever we are trading, it's called instrument, right? I don't know if we are together. There's a question. I'm sorry, I'm late to share the presentation. Definitely, Miss Eunice. The presentation will be shared. Definitely will be shared. No problem about that. So as we said, that was the presentation is based on the beginners, but if everyone linked in to know more, that's wonderful. That's wonderful for everyone to join and to be able to learn more. All right, so we are getting into what are currency pairs, right? Remember we said the forex exchange, it's actually based on the currencies. So what are the currency pairs, right? I've already explained, I've already shown you the examples of the currency pairs. So the currency pairs are the financial instruments available to trade on the forex market. These currency pairs represent the relationship between two currencies. As I showed earlier on, there's a certain currencies with a different currencies. So it represents, the pair represent the relationship between two currencies, between two currencies of two different countries, right? It can't be USD and USD. It has to be USD versus a different country. So for example, when Euro USD is 1.33, $1.33, it represents that the euro is worth $1.33. So if you see 1.33, it means $1.33, right? On the Euro USD. So why it says the euro only? Because it indicates Euro USD, but it gives you the price only for euros of $1.33. Is there anyone understand that? The reason why? All right, if you look at it, it said, for example, when the Euro USD is at 1.33, this represents that the euro is worth $1.33. Why they didn't say this is represent to say that the USD is worth $1.33, but they choose the euro. All right, if no one knows Just take a note on that. Take a note. We'll continue explain and you get it why it's being based on the euro at that time. To better understanding the codes, okay, there's a couple of articles that you can read, online. You can search online to better understand in terms of the codes. The base currencies refers to the first currency in the currency pairs, while the code currencies refers to the later, right? The codes of the currency pairs represent how much of the code currencies correspond to one unit to the base currencies. So now, between euro and USD, euro is the base currency because they are starting with the euro. The name is start with the euro, goes to USD. The euro is the base currency. The USD is the code currency. So the price that you're gonna see on a chart, on a base, that's the price of the base currencies. It's not the price of a code currencies, right? So when you want to see the code currencies, the code currency, it's a supporting currency that goes with Euro USD, that goes with the instrument that you are actually trading. So remember, the point taken is that the pair that is on your right-hand side, that's the base currency. The price that you are trading, it means you are trading based on the base currency, based on the currency that is on your right. That's it. If they say maybe a dollar, it's sitting at 1,975, and the Euro USD or GBP USD, it means you are trading GBP, not the USD. I don't know if you get me there, but if there will be any question, please communicate with me. There's no problem at all. So getting started with the forex, a lot of people they get scared because of there's a lot of scam around the forex. There's a lot of people that they take people's money and without trading it, right? But the forex itself, it's actually a real industry. It's an industry that a lot of people they are involved, a lot of banks, a lot of investment companies. But because of people they don't want to learn, they don't want to understand what it is. Some people who know that, they take advantage to those people who don't understand, right? And now they start, taking their money and, take their money and use wherever that they want to use, lie to them, do whatever that they want. So what I want everyone to understand how forex works, and eventually by time goes, by month goes, everyone should be able to do it on their own without depending on anyone, in terms of trading. So the best way to start forex trading is to study it and to learn as much as you can. If you want to get your hands dirty with it, do so with a demo account. So if you want to practice, put a lot of volume, do a lot of risk management, do that on a demo. So to those who are beginner right now, I need you, when you have time, go on a Play Store, Google Play Store, or Apple Play Store. If you're using the Apple Store, search a MetaTrader 4. Download the MetaTrader 4 terminal. Then it's gonna generate the demo itself. So go on a Apple Store, search a MetaTrader 4. You can just write MT4 and then terminal. It will pop up. Install that one while we still continue. So never rush into live trading account without proper education and without experience. There are many books and resources that you can go through and to be able, to learn. You can even go through internet, and you can be able to actually learn. Now, when it comes on a forex, there's a one thing that's called a spot forex, right? When you are trading, when you download that MT4 and you link your MT4 with the Globex 360 server, you will see it's written spot forex. So you're gonna have to add the spot forex, right? Then it's gonna write spot forex 2. You're gonna have to add the instrument under spot forex, CFDs and indices, commodities, cryptocurrencies, and so on and so forth. So the spot forex, this form of a forex trading involves by buying and selling the real currency. For example, you can buy a certain amount of pounds sterling and exchange it for euros. And then once the value of the pound increases, you can exchange your euros for the pounds again, receiving more money compared to what you originally spent on the purchase, right? So there's a different platform. You might find the other platform that offer the spot forex. The spot forex basically it's actually buying the product, the instrument that is against another. So if it is Euro USD, you are buying the Euro. When the Euro goes all the way up making money, the same instrument, you can close it, take profit and sell it again. So those are the spot in the forex that gives you the option to buy and sell at the same time without any restriction or without any limitation. And then there's a certain thing called CFDs, right? CFDs. This is what you're going to find them on your platform, on your MT4, right? So there's an instrument called CFDs. For example, you and me, when we are trading here at Globex 360, we are trading the CFDs. I don't know. Who knows what the meaning of CFD? Is there anyone who knows what CFD is? It's right there. All right. Okay, no problem. So the CFD stands for the contracts of difference. It's a contract of a difference, right? It is a contract used to represent the movement in the price of the financial instrument in the forex term. So in a forex term, the instrument that represents the movement of the money of that specific company is called the CFD, right? So if maybe someone will come to you, one of the mentors, and says that, no, you know what, you need to give me 10,000 so that I can teach you CFDs. They already trick you with a name, with only terminology of CFDs. It's the same thing that we are trading on a platform. It's a contract of a difference. So when a broker open a brokerage, they need to have a contract with a liquidity provider that has the CFDs, that people can be able to trade based on the movement of the price of that instrument, based on the movement of the price of that company when we talk about the stocks, right? This means that instead of buying and selling a large amount of currencies, you can take advantage of the price movement without having to own asset itself along with the forex. So before, instead of you trade like the way we trade, we buy, we sell, we close now, we open, you needed to go to stock exchange. When you go to stock exchange, for example, Johannesburg Stock Exchange, then you needed to actually put your money, maybe for example, in Sanlam, right? And wait for Sanlam to go up. When the shares of Sanlam goes up, that means you're making money. When the shares of Sanlam goes all the way down, that means you're losing money. So that's what was happening before, until the forex itself has been simplified to become retail industry that you and me, we can trade. That's where it introduced the CFDs, the contracts of a difference. We are trading the movement in a price of financial instrument. That's it. So we are not buying the stock of a NASDAQ to people who trade NASDAQ. We're not saying we are buying a NASDAQ. We are trading that movement of the price. That's what we are doing. That's why forex is a very, very high risk, because we're not buying that product. We are betting on the movement of it. So if someone bet more money on a drop movement and you bet a small money on a higher movement, you might find out that the market favors the guys that have so much money in the other direction that goes for your instrument. So that's most the key there to take. We betting the movement of the price of the worth of that company, if we are doing the companies, or of the worth of that currency of that country, the movement of it. We're not buying that product or investing our money in that product. Woo. All right, we just have a load shedding. I hope you can see me, but definitely the electricity will come back now. It's gonna end up cutting because we have load shedding. As you can see, it's dark, but definitely the electricity will come back. The generator will kick up now. So if it is stopped, Don't worry. In 2-3 minutes, we'll be able to reconnect again. Okay.